Good morning. Okay, that's perfect. Now, interesting. Alrighty, people. We're gonna get started here in a little bit. And basically, we're gonna go over how to capitalize on AMC. I will still be doing it in a paper trading account. I might be doing it in my brother's $25,000 account. Um, but yeah, it seems to be pretty straightforward, and it seems to be there's ways that you can make it more aggressive, less aggressive. So I'm going to go over everything to know about the strategy, so people can do exactly what it is they want to do rather than just following the one example that I've already shown. I'd like people to feel fluid in this and have a perfect understanding of what's going on so that you can play it exactly how you want to play it, not how I want to play it. And that way it's your money and your investments and not mine or my advice or anything like that. So let's get you guys all trained up before the market opens so that you know exactly what you want to do before you get the chance to do it. So in this example, we've invested a total of $300. Okay, so if we look at the $8 strike, it says so our total cost is 289 actually, and basically we were able to get out at 248, so we lost $41 by it dropping to $8. Okay, but if we look at it from this perspective, it cost us, how much was it? 85 bucks, and we sold it for 140. So that means we made $55 on this one trade. $55 of 289 is what? Was that right? I don't think that was right. Let's do 55 divided by 289. That seems more right. And that is 19%. So, by it falling to $8, we would have made 19%, right? But we're already betting that it's going to go up with this call, and we know the calls make more than the puts. So you actually want to have a little bit more money on the puts if you want to make as much. So it actually might make more sense to do 2 contracts on the puts for 170, 1 contract at 114, and then when I have this $40 strike on 2022, I'll show you guys what it looks like if it goes to $40. But without $40, let's look at this first. And now what we see is if it drops down to $8, we now make that $55 on 2 times. So we're making $110 on a net investment of $374, which is now 110 divided by 374, 30% of my entire account balance by AMC hitting $8. I cash out for a 30% profit. Now it only says I made $14 profit, right? It's because I've lost money in all my other trades when it comes down to $8. But as soon as it bounces back to $10, I get all my money back in my 2022 and my June $12 strikes, as long as I still got some theta. And then I can come in here and I can buy the put again once it comes back. So the prices that I'm showing you right now is a 2022 instead of a 2023, and then I'm doing the actual straddle on the call and the put on the $12 strike and the $8 strike of the June expiration. And so I'm saying I don't need more than May, June, which would be basically 45 calendar days, which is maybe 30 trading days, that it will touch $8 and $12. And so maybe that's not enough time, right? Maybe instead of doing June, I should have done, let's just say, September. And so if I go September and I go $12 for 222, and I go put for the $8, then I can go, we'll increase this to 3 of these. We'll probably do 4 of these guys, actually. And then we'll come up here and we'll probably do at least 2 of those guys. Let's see what that looks like. Alright, so if it comes down to $8, I'm now making $220 something, which is going to be about 30% still. If it goes up to $12, my $12 strikes are now worth of roughly $354, which they were $222. So that's $130 of profit, which is a little bit low. But if we do come here and we see that the squeeze happens on the upside, we are well covered on the squeeze because of our $40 strikes. So I mean, if it goes to just $40, which is roughly 300% from where it's at today, we're making, I mean, at least 800%. Like, we already know these numbers are conservative, but even with what they're at now, we're still making double than what anyone would have been making in the stocks if it just squeezes to $40 in a second. So basically, my goal is to cash this guy, like cash out the put and the put and so the $8 put and the $12 call. My goal is to cash them out once they hit, and then buy back in once it hits back at the median of $10 or whichever median you calculate. Everyone's gonna have to determine their own number, right? If you think it's 950, then maybe you like the 1150 and you like the 750. It all depends on what your starting number is, and maybe you don't want a $2 range. Maybe you only want to trade a dollar range up and down, and you want to go 10 to 11 and 10 to 9. And every time it hits one or the other, you're looking for a smaller percent profit, but you're looking for more often to profit. There's no right way or wrong way. It all depends on the market goes. But as long as you play the same thing every single time and you don't get FOMO about other people's opportunities and you just wait for yours to hit, there's no way they don't hit. There's no way they don't hit over the next month. There's no way AMC does not hit $8, $10, and $12 without just going straight up. Unless it goes straight up, it's going to hit all three of those numbers. Doge is ripping, somebody said. Good for the Dogies. I ain't about it. So rather than shorting the AMC stock, you only need 3 legs to accomplish what we've talked about yesterday. And the 3 legs you need is one of your conservative legs, which is like you're buying the stock and or deep theta, high profitability strikes. So like a $40 strike on 2022 would be a good example of that. 2023 is also a good example. And then basically, oh, I didn't change this to September, did I? That's what I did wrong. So if I go here, then I go here, that'll change it. Okay. $464. Basically, I make about $100. 600, 700, 800. So it'd be about 15% of my account balance. Then if it goes up to $12, we go to 351 from 222, which is $130, which is at least another 15-20%. So this is how I would play it, guys. This is how I'm gonna play it. When the market opens, I'm gonna close out my positions and I move everything into only these 3 proportionally with my $71,000 or whatever. I got about $70,000 in my paper trading account. I'm going to move them proportionally into these 3 contracts right here. And then basically, if the $12 strike ever hits, I'm going to cash out for a profit. If the $8 strike ever hits, I'm going to cash out a profit. If it ever goes back to $10 after one of these 2 hits, I'm going to reload up the leg. And then at that time is when I actually secure my profit, because the one side that lost the money when the other side gained the money will now get its money back when the stock price goes back to where it was. And then that's when I reload up on the leg in case it goes back the same direction. The only thing that I will say is right now I'm going to trade the September to expires, giving it a couple months to get to both prices. So there's plenty of theta to make sure both prices get hit. But if this was June or July, I might start pushing the September even back further. And so right now I'm going to play the Septembers on this and for the next, I don't know, 30, 60 days. But maybe in 60 days I'll do something different. All you need is 3 legs to accomplish this, people. It works with GameStop the same way. You can do this with AMC or GameStop. And basically you are guaranteeing yourself a massive profit for a squeeze. And then at the same time, if the hedgies continue to play the games, you will be able to bounce between the $8 to $12, making a 10 to 15% profit every time you go from 8 or 12 back to $10. And if you do that, and let's just say this happened for the next 6 months, and let's just say if it did happen for the next 6 months, that it happened 20 times, that you touched one of these numbers and then hit back to $10. Let's say that happened 20 times. If that happened, and you had $10,000 in your account right now, you would have $60,000 in your account had you been taking all those profits and reinvesting them into these three contracts over and over and over again. And I'll show what that looks like here at market open, and once we finally hit one of the numbers, and then go back. April Hayes says, hey, hi, how are you? Does everyone feel pretty confident with what's going on with the new strategy? I might be trading my brother's $25,000 account for it. He hasn't decided yet. He still has only 2023 $40 strikes, but he may want to move half of his money over into this. And so we are waiting to find out. But if not, that's fine. I will still do it on the paper trading account, and I'm still hitting up a couple other people to try to get some money in my account. And we'll see what happens. So let's go ahead and do the math on this specifically. So what we're going to do, we're going to come here. We're going to say Jan 2022, $40 strike, 0.90 per contract, in two contracts, for 1.8. Okay. 9. So we'll do 9. Oops. Okay, we'll say $12 strike, 2.22 ask price, one contract for 222. Then 917, $8 put, 1.912, that times 2. Perfect. Alright, so net equals sum of this there we go. Then the profit of that one is 464, and that one 351. 464 and 351. So okay, then the percent of profit would equal this. Alright, so every time it goes down to $8, we should expect around a 10% profit. Every time it goes up to $12, we should expect around a 16% profit on the calls that we cash out. And then as soon as we go back to the mean, or the $10 mark, then the other side got back the losses, that whatever it lost, plus what we got on our profits. And then we buy back in, and we just repeat, rewash, repeat, rewash, reinvest the profits. So if I make 10% profits on $70,000, that would be $7,000 profit. Then I just spread out that $7,000 between these contracts accordingly. what's interesting is that I actually, if you wanted to be super freaking bullish, you actually don't need the 2022s. And you would see that I'm still in a position to make equal or more than anybody else that is just invested in AMC stock. And that's by buying just the $12 strike and the $8 put on the September expiration. If we go from, let's just say 7 to 15 for a minute. Okay, so at the $8 mark, we could be from, could be at the 464, 382 to 464. While if we go to the $12 mark, be at the 351 still, and we're still at the 222. So, we looked at this guy, and we basically said 2.22, 3.82, then 3.51, 4.64. Sum invested, so we'll say net equals sum, then say 1.29.82 equals this divided by this. Oops. This divided by this. This divided by this. Alrighty. So without playing the $40 strikes, you could get it up to 21% and 14% basically. For the same numbers. And if you wanted to even it out a little bit, instead of doing 1 and 2, maybe what you do is something like 3 and 5. No, because it's at 1 and 2 right now, and we want the put to have more. So what we do is we do 4, try 4 and 7. No, it'd be 9 and 4. Something like that. Then if we calculate, now at the $8 mark, we're at 2,088, which would be about 370 bucks from a total of 2,500. 370 bucks from a total of 2,500 would be $15% now. So I've increased it a little bit. Maybe we want this to be 10 and 4, which would be no different than 2 and 5. Calculate. So this is $1,500 invested. Now at the $8 mark, I got $1,160 there, and of this, so I made $200 profit, $210 from $1,500 invested. And we were at 14% profit. That should have gone up, but for whatever reason it's not going up. So obviously the more I do this, the more it should have an effect. Alright, now we're at 1,400 right here that we can cash out for, and we're at 1146 right here, so that's 250. And then if you add these together, it's about 1,600. So now we're at 250 profit for 1,600. So if we do 250 divided by 1600, you get almost 16% profit on the put side. And then on the call side, my 444 at $12 still growing to $250 on that side as well. So if I wanted to be equal on both sides, you'd only have to do 2 contracts on the 12 and 6 contracts on the $8 put. And then if it did squeeze in between, what would that look like if you had that big of a ratio? If it did squeeze in between, you would still make just about as much as anyone that was just invested in stock. Had they just bought stock and not done any of this, you'd still be making just as much as they would. And so the only thing that I can say is that when you go to cash one of these out, if I was going to go cash out my $8 puts for the profit, remember I can go in and buy a $3 put just in case if it fell to zero for basically free, and buy a very small percentage of them as I wait for it to go back to the mean to reload up on my $8 puts. On the $12 calls, if you are not playing a 40 or stock on the side, then you may want to do something on this so that if it squeezes when you close your $12 calls for a profit, you may want to, in the meantime, load up on something else that will protect you from a squeeze, just in case. Stock would be, at this point, if you cashed out the 12 and you thought it was going to drop back down to $10, the thing that would lose you the least amount of money would be stock. And so if you just want to go buy stock as you kind of take those losses on, that would not be a bad thing. And again, you don't got to do it with the full account balance, just enough that if it squeezes, you're still making a fortune. Very cool, Richard Jacob. Big Money says, I have a $10 call on AMC for May 14th and a $12 call for June 18th. Am I good? I don't know. That doesn't make a lot of sense to me. Did you not just watch the video? I would say you are not good. I can't tell you guys what are the best options. I can only tell you guys what I've told you guys. You guys got to do your own research. I can only tell you what I've told you. It works on whether you're doing 2022 expiration, September expiration, 2023 expiration. Just the further you are doing your expiration, the lower the percent you should be looking for on your ROI. And so I'll show you what that means here in a second as soon as the market opens. But it's nothing to come in here and buy at least one of these guys. And now if it goes to 40, you just increased by a 1 full X by adding in $90. That makes sense. So what I'll probably do is I'm going to do 10% in the $40 strikes of January 2022. And then I'm going to do 45% here and 45% here. Actually, what I'll do is I'm going to do 10%, 40%, and 40%. And I'm going to, and I'm going to leave out 10%. And that other 10% I'm going to leave out just in case I got to buy something up here or buy something down here before I cash out for a profit or something. So I'll just leave 10% chilling in case anything needs to happen in the future. Otherwise, we are good to go, and we are ready for the market open in 3 minutes. my protein. $30 grams of protein right there. That's awesome. That's awesome. Alrighty. Got 2 minutes. One minute. The purpose of my paper trading account is to trade the trade that I'm talking about in the most aggressive manner possible. Not possible, but in a pretty aggressive manner. And basically showing the high potential of what it could make and also what it could lose if you push the max. And so let's see what that looks like, people. That's what I want to do. I recommend people do the September if you want to be safe and conservative and like guarantee some profits. September for the $12 and $8 strikes would be best. $8 for a put, $12 for a call. September expiration would be perfect for easy money, and just keep washing and repeating in the September expiration. But I'm going to do something a little bit more aggressive than that right now, and you guys will see. Let me know what you think. Let's see what happens. Close out all of it. Market. Preview. Send. Okay. Then I'm going to close out all of these. Close. Market. Preview. Send. Okay. Then close out. Market. Preview. Send. Okay. What do I want to do? I want to go to settings. See if I can actually just reset my paper trading. I know there's a way to do it somewhere. Oh, here we go. Alright, let's reset this bad boy. That way, there we go, perfect. I got all my cash buying power. So now I'm going to do, let's do half in AMC, half in GME. So AMC is going to look like this. I'm going to come in. Actually, I'm going to do all on AMC just because the options are so much cheaper. No, I'm going to do half and half just because one stock might move while the other might not move. I'm definitely going to do half and half. So for AMC, I'm going to do end of the month. We'll actually do one full month of, we'll do whatever expiration has at least one full month of theta, so it'll be the June 4th one. And then obviously I'm going to do a $12 for the call. And I want 50%, 40% of 50%, so I want 20% of my account balance, so $20,000 in this one. So 200, no, 250, almost, 240, perfect, okay. So I got 240 right there, Let's do another one. Add option. Oh, no, we want to do AMC. Add option. And we want to do June 4th. We want to do $8 strike. I may have already messed it up because I forgot that I want the put to be worth probably at least twice as much as the calls. So for this one, let's go ahead and do 240. What's that? No, so let's see. 150. No, 100. A little still high, 90. So if we do 20,000 here, bring 10,000 off the other one. So I'll lose some money off my crappy trading, but that's okay. So I'm going to come back to my account. I'm going to go to my positions. I'm going to close out half of these guys. Actually, let's do 140 of them. Market. Okay. So now, oh fuck, I fucked up big time, guys. I did $98 calls, and I didn't want to do any of that shit. Fuck, I'm going to restart it. Hold on. I fucked up big time. Alright, so I'm going to reset this one more time. Here's what I'm trying to do. $8 puts, $12 calls, June 4th expiration. I want basically, so of my 50,000, 40,000 is going to go into calls and puts of the AMC. So 30,000 is. So 20,000 will go into puts, 10,000 into calls, 10,000 into the 2022 $40 calls, and then another 10,000 will just hold. That's what's happening on AMC right now. So if I go AMC, and then I go add option, and then I go June 4th, and then I go $8 strike, and then I go put, and then I go market. Then I can come in here, and if I say 250, it's at 17.5, and I want it to be closer to 3,000, or 20,000, I mean. So 21,000, I'm good with that. Let's go ahead and do that. 21,000 into puts on the $8 strike for AMC for June 4th. Now I'm going to come back to AMC, add, and this time I'm going to do June 4th. I'm going to do $12 strikes for calls, and now I'm looking for closer to $10,000. So if I do 125, I get 9,875. That's good enough for me. Okay. Now I want to come in and buy my AMC stock and or long-term options. So I'm going to just go ahead and find the 2022. And I'm going to go ahead and go to the $40 strike. And I'm going to go ahead and throw $10,000 on here too. Okay. And boom. Now I got $40,000 invested into AMC. And now I'm going to go do about the same thing into GME. So for GME, I'm going to add an option. We're going to go June 4th. And on GME, we are going to do... Okay, guys, so GME is in a slightly different spot than AMC. I feel like AMC has room to go down, while I feel like GME is at its bottom. I don't think GME goes below 140, maybe even 150. And so instead of doing what I'd normally do, I'm going to do one thing slightly different on GME. And all I'm going to do on GME is I'm going to actually play the median this time. And so I'm just going to wait. I'm not going to short anything on GME because I don't expect it to go down much more. And I expect the median to be 175. And so I'm going to go ahead and play the median right now for the majority of the money that I want to do on here. Let's see what that looks like. 18,000. So let's do... We don't want to do 55, so do 46,000. So basically all the money I want on GME, like 1 month, it's going to hit 175 is what I'm betting. I know that's super aggressive and a lot. Actually, I won't do that just because it's so aggressive. You guys don't got the nuts to do it. It's an easy fucking win. I would totally fucking do this. But I just feel like the wins won't be... Well, I guess I can just tell people that the wins are a little bit different. Like, I know it's going to make money, so I'm going to do it. That's what I would do in real life, so that's what I'm going to do now. And now I'm invested in GME and AMC at this point, and all I gotta do is wait. And yeah, so if we go, like, ignore this stuff over here, this stuff's gonna jump all weird. Options get crazy sometimes. But all we're gonna be looking for is why is this only showing me my AMC? Where's my GME? The fuck? Positions. Guys, don't trust the paper trading accounts. Their paper trading accounts are whack as fuck. Whack as fuck. There we go. Now my GME's in there. Alrighty, people. We are good. So it cost me about $10,000 to buy in there. Buy in for $80,000 worth of contracts. I still have $11,000 of buying power. I'm not going to spend any of that. I am just going to chill right now. And this is, if I had $100,000, this is exactly how I would have played it. Exactly how I would have played it. Right now, today. Well, that's all I really wanted to show you guys. So there's no more shorting of the AMC stock if you want to play the $8 to $12 range. There is no more shorting of that stock because we're just going to do the puts and the calls. The less theta you have, the more risky it is. When you're doing the $8 and $12, the more theta you have, the less profits you should be looking for on each swing. But the more confident you should feel in hitting each swing before losing any money really at all, because you got so much theta. I hope that makes sense to everybody. If there's no questions, I'll probably be logging off, and maybe I'll come back in a little bit, maybe in a couple hours or something. But I just wanted to make sure I got the details out to anybody that was planning on trading this strategy before the market opened, and I feel like I've done a good job of doing that. So I hope everyone kind of finds their own way of doing this. I hope everyone makes a lot of money. I think it's a home run. It's a home run, people. AMC down 3%. GME down 2%. Very, very, very cool. Oh, that was the other thing that I wanted to go over with you guys. Let's do that real quick. Alrighty. So I did the June 4th expiration. And I did the $12 strike, which is right here. And if I go to chart, and then I come back to here on the put side, and I do the $8, and I do the chart, and then I come here, and I go to AMC stock price history, and I find a time in the recent past where AMC went from $10 to $8, or vice versa. Fuck. Okay, so, for example, right here, April 13th, we were at $8.31, and then April 23rd, we hit $10. So I'm going to look at the April 13th option price, and then for the the $8 puts, April 13th and April 23rd, right? That makes sense to everybody? So if I come here, oh, don't fucking tell me it's not available. Bullshit, you're not available. Oh, maybe because I'm on the 6 month. There we go. Okay, perfect. All right. What did I say? April 13th? Oh, no, it doesn't go back to April 13th. Only to April. Okay, well, we can go this way then. So, up here, it reached as high as at least 70 cents on April 23rd when it went up to $10. And then the low that it's hit is 41 cents on April 27th. How low did we hit on April 27th? Oh, that's when we went up to $12. Nice. Okay. So basically it went from 70 cents to 40 cents by going from $10 to $12. And so basically almost 50% cut in half, which means if it went the other way, if it went from $12 to $10, you'd be gaining 100%. You'd be going from 30 to 40 cents to 70 cents. So you're gaining 100% by going from 12 to 10. So that's cool to see. Now let's look at the first chart to see the 23rd to the 27th. So the 23rd, it fell all the way down to 99 cents, and then the 27th grew all the way to $2. So 100% growth by that $2 swing. You'll get 100% growth in this 1 month to expire option. Roughly 100% growth. So if I see AMC go to $12 or $8 right now, I'm expecting anywhere from 50 to 100% profits on what I invested in that specific thing. So I put 20,000 in my puts and I put 10,000 in my calls. So my calls could make roughly 10,000 a profit, or my puts could make 10,000 a profit. But basically, if I only had $100,000, that means net I'm making about 10% profit on my net account every single time. And that's not counting what I put into GME. So I actually only put in $40,000 into this. So it's actually 25% profit net every single time, if you count what I actually invested into AMC. So that's big baller stuff right there. I'm super glad I just looked at these numbers and did that for you guys before I logged off, because that was super important for you guys to understand if you're going to take part in this. To me, there's no easier money, people. There's no easier money. So with that said, if you guys got no questions, I'm probably going to take off. We got 30 people in the chat, but not a single comment in the comments. The only difference is if you go to 2022 and you play the $8 strike and the $12 strike there, instead of making 100% or 50% type things, you should be looking for more like a 10 to 20 to 30 to 40%, you know? And so you just got to go do the math on the options profit calculator, find out roughly what it's going to be, watch the prices when it finally happens, go check the charts, and then just make sure that you're cashing out for a realistic number whenever the numbers are hitting. If it hits your $12 strike and you're waiting for more profits, then you aren't playing it right. I don't think GME can go below 140. Last time it went at 132, and that was before DFE doubled down. And so I think that raised the number. I think 140, 150 is probably the lowest it can go. I think the mean is 175 for GME. And so, yeah, once it hits 175, I'll do the $200 calls and the $150 puts, and I'll play those, and I'll trampoline bounce it like I am AMC. But because it's already at $150, I feel like it's already at the bottom. So I just threw whatever GME money I was going to play into the 175 strike of GME for 1 month to expire. And as soon as it hits 175, I'll cash that out and then go back to normal and play the GME movement like I would the AMC movement. Anything else, people? Anything else? Too easy. Too easy. The hedgies are foot. The hedgies are foot. moly, the NASDAQ is falling. NVIS is getting crushed again. SENS is getting crushed again. Oh no. But granted, so is AMC and GME. So is everything. Everything getting crushed right now. That's okay. Why are GME and AMC 1-year charts nearly identical? Because they both got crushed in COVID and the Fed didn't save them like they saved all the other stocks. And then, I mean, they're definitely not identical. GME had a boom way before AMC had a boom, if you'd count like October to January. But I understand what you're saying. The variance between the two, or the covariance between the two, is very strong. And it's because the diamond handers are in both of them, and the hedgies are playing the same games on both of them, thinking that their plan will defeat the diamond handers. And if they use one plan on one stock, of course they're going to use it on the other stock. It wouldn't make sense for them to think they got the best plan and then use two different plans. I wouldn't worry about the market getting crushed, guys. Especially not with the new info. I think we're all good. I hope you guys have a great day. I feel money's coming for a lot of you guys very, very soon. All positive, good feelings. Good luck, people. Good luck, people. Good luck. I'm sure I'll be back in a couple hours for something. I just jump in and out whenever I feel like it. Alright, later, fools.